Good and welcome, guys. It's Monaco Daniel once again. In today's video, we are going to be looking at what you need to know about support and resistance, how to mark out support and resistance zone, as well as almost every other thing you need to know about support and resistance. Before I get right into this video, don't forget to like the video, subscribe to the YouTube channel, as well as leave a comment below. Wherever there are traders, two common words that you hear a lot from traders are support and resistance. And for me, it's more like it's the basis of technical analysis. Almost every other technical analysis system has a relationship or two with support and resistance areas or support and resistance trading. So you want to ask yourself, what is support and resistance? If support and resistance is a very popular topic among traders, then you want to know what support and resistance is. So that is what we are going to be talking about in today's video. Yeah, so without taking too much of our time, let's head straight to the big questions. What is support and resistance when we talk about technical analysis or trading in general? What is support and resistance? Yeah, so basically we can put it that support and resistance are more like price ceiling and floors. Yeah, when you have this price floor is somewhere that something drops to and then it finds support, it bounces on to go back up. And then a ceiling is more like the peak of a rally where you throw a ball to the ceiling, it comes in contact with the ceiling and then heads straight down. So support levels are particular levels in your price charts that when prices drop to, it tends to react to. Prices doesn't just get to this level and then go through them. These are key levels that prices would ordinarily want to react to before either bouncing back up or going in the direction of a continuation trend. With that being said, let's look at support and resistance from the charts we have up here. Some of the things you need to know about support and resistance, some of the things you need to take into account when looking at support and resistance, as well as how people trade support and resistance. Personally, I don't see support and resistance as a trading system of its own. I see support and resistance the same way I see trend lines as well as trading trends and market structure. I look at all of this as a confluence system that is used to complement a particular system. I, for one, I am a supply and demand trader, but support and resistance are just extra confluences for me. I don't think support or resistance level on its own is enough reason why anyone should want to get into a trade. You just need an extra confluence. You need something else to back it up before you can jump into a trade. So, like I said earlier, support levels are levels where prices drop to and then find support. It is an area where a lot of buyers sees value. Remember I said prices doesn't just move towards a particular direction. Price action is a product of buying and selling activities. So support levels are this level where you have a lot of people wanting to buy, and then this buying pressure just forces prices up. Why resistance level is like more like a price ceiling. It's a point that prices get to, and then a lot of people begin to think, oh, we can't go beyond this level. Let me sell and take some profit. That's the resistance level. So this is the chart for Bitcoin against the US dollar. Is a daily chart. You can find support and resistance level on whichever time frame, be it daily, weekly, monthly, as well as hourly or minutes charts. But something you should also take into account is key levels, be it support and resistance, supply and demand, trend lines, whatever it is, are stronger on the higher time frame than on the lower time frame. I won't be buying in a lower time frame support level if I am just in front of a higher time frame resistance level. So higher time frame structures, higher time frame setups are usually much stronger than lower time frame structures, because these structures tell the bigger picture. They give an idea of where market is headed in a much bigger scale. Yeah. So generally I refer to support and resistance levels in the market as neckline structures. So these are usually levels, these are points where you find quick reactions in the market. Like this. You can see this. Like this, like this, like this. Okay, these are all neckline levels. So I prefer to refer to these things as necklines rather than just support and resistance. This is a support level. You can see price is coming back down here, doing a little consolidation, and then it goes back up. Price is coming up here, doing a quick rejection, and then coming down here. The same thing up here, same thing here, and then the same thing here. Yeah. So how do you identify support and resistance on your charts? That's the bigger questions. How do you identify support and resistance levels in your chart? Like I said earlier, support and resistance level are sharp turning areas. So you can find them basically neckline areas like this, like this, like this, up here. But one easy way I identify these things is I just switch my charts to a line chart like this, and then I look out for these sharp turnings. And one principle that a lot of support and resistance traders see, you find it a lot more often with support and resistance traders. You hear them say that the more a support or resistance level have been tested and respected, the stronger it becomes. So what this basically means is that if you find a level that have been tested, support or resistance level that have been tested on multiple occasions, then this might be a good level to inform your buying or selling opportunities. So I'm just going to go ahead and mark a couple of these levels, and then switch my charts back to the line chart. Now, when you want to mark out support and resistance levels, you want to look out for these areas where you have multiple tests. Since the common law with support and resistance traders is the more the support and resistance level have been tested and respected, the stronger it becomes. So when you look out for this level, you ordinarily would want to look out for where we have many of those sharp turnings. Like here, you can see this particular level has been tested once, twice, 3 times, and 4 almost here. Up here, if I extend this to this point, then you realize that these have been tested once, twice, 3 times, the 4th test here, and then we have a 5th test here. The same thing down here, we have 1 test, 2 tests, 3 tests, 4 tests, and we are not so sure if we're going to be coming for a 5th or 6th test. Then I think we still have another level here. Yeah, been tested once, twice, 3 times, and then we are approaching it for the 4th time. Yeah, so you can just zoom out your charts and then mark out these levels on several time frame. Remember, higher time frame levels are usually more stronger than lower time frame levels, but just to make sure that we don't mark too many things on our chart. Personally, I don't like my charts looking too stuffy and messed up. I like my chart looking very simple. So you might want to look out for those key levels that have held ground whenever they've been tested and then respected, and then you want to use that to inform your trade. Now, another thing to also note is that when a support or resistance level gets broken, yeah, when a support and resistance level gets broken, it automatically switch sides. So if we are having this, let me take here for example, you can see that at this point we have a neckline here, which is a resistance neckline. The same neckline here, market reacted here, came back here to react to this same neckline, came back to react once again, and then dropped down to this place where we have a small neckline, test the level, and then broke through this level up here. So we came down to test this and then went through this resistance level. Automatically it became support because a lot of buyers, a lot of sellers, a lot of market participants used to see value here. Their prices came up here and then they feel like, oh, prices have gone up already. Let me sell and take some profit. But the moment that this level gets breached, the buyers change. This level is immediately seen as a good buying opportunity. Remember, prices doesn't just move. We inform the movement of price. So this is immediately now seen as market participants as a good level to take a buy, maybe a good place to take a buy, and then prices come back to test it, went up, came back, reacted to it again, did a little reaction here, and then prices came down, it immediately became resistance. We are yet to go back to test this level, but it is now resistance. So when support gets broken, it becomes resistance. When resistance gets broken, it becomes support. Now, how do you trade support and resistance levels? Well, personally, I'm not a support and resistance trader. I might not be very right to tell how to get into trade using support and resistance. But like I said earlier, what I do with support and resistance is I use it as a confluence. I do my supply and demand trading and then watch how these zones confluences with my support and resistance level. So I use support and resistance as extra confirmation to get into a trade. But an easy way to to trade off support and resistance level is when you mark out these zones and then prices begin to drop down into your zone or rally up into your resistance zone, you might want to switch your chart to a much smaller time frame. Let me use this as an example. Okay, this was a resistance, then became support when it was broken. So I'll try to switch my chart to 1 hour. Okay, now up here we have the resistance. We have a neckline. Let me I prefer to use that word instead. Now, switching to 1 hour from the daily time frame, you will notice that there is a quick reaction. Prices came here and almost immediately we saw a quick bounce off from this level. So you might want to go into lower time frames, maybe 5 minutes, 15 minutes, or even 1 minute time frame, depending on which of these time frames is suitable for you, which of them you find best, and then look for that reaction, look for that quick reaction. Look out for sellers losing momentum. Right here we have a lot of pressure by sellers, but come to lower time frame and then look out for sellers losing this pressure. Then you can look out for a quick reaction like what we have here to take your entry or exit. Yeah. So that's it with how to get into a trade, how to trade your support or resistance. Now, if you come back to your daily charts, you will notice that this is almost an this is an almost insignificant reaction on your daily chart. Or if you took this trade from the 1 hour, then you would make some cool gains up here. This is about 18% before the reaction back down. So I'm going to try this with a couple of non-crypto charts. I am basically a cryptocurrency trader, but I am of the opinion, I'm of the school of thought that a good technical analysis knowledge shouldn't be applicable in just one market. When you have a good technical analysis knowledge, then it should be a knowledge that is practical, that is applicable in not just one financial market. I trade cryptocurrency markets using supply and demand method and a lot of other confluencing systems, which support and resistance is one of. But I analyze a couple of other non-crypto markets, and once in a while I do analysis on the stock market. Now this is the charts for silver. So we are just going to try as much as we can to zoom out and then mark out some support and resistance levels and then watch how market react to it. Once again, I'm going to switch to my line charts, and then I think I'll do this using the weekly charts. Okay. Now, remember I said first thing first, try to identify the most obvious zones, the most obvious levels that we got reactions from. Yeah, we have one up there, we have another one down here, and then we have yet another one down here, and another one up here. So I'll try not to stress this video too long. Yeah, okay. Now let me quickly switch back to my candlestick chart. Now you notice that, okay, currently the price of silver is around $22.4, and you notice that there have been a couple of reactions. Let me take this to the daily charts. We have a couple of reactions on this level. You see price is coming down here, bouncing off almost immediately, approaching that same level and then reacting to it, coming back, reacting to it, and then so this level have been tested and respected once. I'll count this as twice, 3 times, the 4th time, and then it looks like we are going for the 5th test. Up here we have a level that has been respected multiple times. If I zoom this out, we have 1, 2, 3, 4, 5, and about 6 times. So that is it with support and resistance. These are some of the easy ways to identify your support and resistance zones. Support and resistance is not an holy grail, like I said earlier, but for me it's a very great confluencing tool. Yeah. And then lastly, before I call it a day, support and resistance. One common mistake I see most people make when it comes to support and resistance is they treat support and resistance as a particular price level instead of treating this thing as a price range. Okay. Yeah, for example, let me quickly go back to the weekly charts. I'm trying to make this real quick. Okay, we have a reaction here, and then we have another neckline level here, up here. So support and resistance shouldn't be just a particular price. it's a price range, it's a level where you are possibly going to get a reaction from. So it's going to be a lot easier for you to take your trades, for you to take entry from support and resistance when you see support and resistance not just as a particular price level, but as a price range, as a particular area of value where you could possibly get reaction from. Now, if you look at all of these 1, 2, 3, 4, and 5, and even here to the 6, you will notice that we didn't get the reactions from exactly the same spot, but from the same area. So it is just an area of value. Look at this tree, for example, all almost within this rectangle, but not from the same spot. Okay, I think here we have, okay, let me bring this here and then extend this to this point. Okay, and then bring this here. So we have about 6 to 7 tests from a close range, but not from exactly the same spot. So support and resistance is not a particular price. You can't say the support level for Bitcoin or for gold or for silver is at a so price. No, to me that's going to be wrong. You just mark out a particular area of value and then watch how market reacts when next it comes to that level. So that is it for this video. Do a very wonderful day, and once again, don't forget to like the video, subscribe to the YouTube channel, as well as leave a comment below. Thanks, and enjoy the rest of your day.